It's a good moment for retail banks like Bank of America, but a tough time for large Wall Street investment banks like Morgan Stanley as the tech sector and even the Dow Jones Industrial continue their year-long moves. What are the prospects for investors during this long, hot summer? We'll learn from one top investor where to spot opportunities next on Quartz Smart Investing. Thank you for joining us. I'm Merrill Brown. Our guest today is Shelby McFaddin, investment analyst at Motley Fool Asset Management. Shelby, welcome to the program.
Thanks for having me, Merrill. Great to be here.
We're in an important week this week for earnings, and for the most part, the news is positive. Still, there's no significant downturn, but the economy isn't fully in the clear, according to your view. What do you think?
Yes, I'd absolutely agree. I do think that things have been sticky and not necessarily in a favorable way. We're seeing prices being sticky, and especially when we're looking at houses and housing services. When we look at certain real estate markets, prices look about as low as they're going to go, with rates continuing to go up. On the same side, we're definitely seeing that wage stickiness, especially in service wages. So when we look a little bit lower on that ladder, we're seeing that being continually sticky, partially because those individuals need to work more hours, higher wages to keep up with some of that goods and prices inflation. So I think coming this month, the Fed has definitely got a big task at their hands, especially with some expectations changing a little bit following a pause. So, you know, the outlook is not so certain. We don't know if it's a landing. We don't know if it's a free fall going into the end of the year. We just got to sit back and ride on.
Chances of a recession, what do you think?
I think chances of a recession, probably a mild one, somewhere over 50%, probably fourth quarter, quarter one of 24. And I say that because at this point, there is sort of this argument of, is the Fed going to have to put us into one? And I think that that's where that 50-50 comes from, because there's a chance that it gets forced, and there's a chance that we just sort of end up at a higher baseline of inflation than anticipated. So I think that's where the 50-50 kind of comes from for me.
In terms of stock, the S&P continues to tick up. A number of your colleagues and forecasters are predicting the S&P could get to 4,800, even 5,000. What do you think?
I think that might be a little bit bullish for our taste, partially because while yes, usually recessions are priced in advance because, of course, we don't necessarily know that they've happened until after the fact. But at the same time, when we think about the fact that, or think about the valuations that have to sort of back up these estimates, when we look at what's coming through earnings, it's just looking less and less likely. We've seen a lot of the tech companies that do drive that large cap performance do a lot of their fat trimming already in the beginning of the year and through the first half. So now the question is, what other strategy pivots, what other innovation, what other levers are there to pull? If they can surprise us and do that, then we just might reach that point. But if not, I think it's going to be a bigger question of whether we can hit that.
And I know you personally are looking for mispricing opportunities, stocks that haven't quite found their mark yet. Where are those mispricing opportunities?
Well, we tend to find those not necessarily in one sector, but typically in misunderstood names. And they could be misunderstood for a lot of reasons. It could be that they're viewed as a value trap. It could be that they're in an industry that maybe doesn't look so favorable when there are a lot of questions about availability of consumer cash and interest rate conditions. But if they're the best at what they do, then they can succeed. There are a number of consumer discretionary names that have absolutely outperformed in the market, not just because they're popular tickers, but because the market that they appeal to continues to deliver because of the income strength that they have. So when we're looking at those sort of stickier classes of income, they've got that lower elasticity, and that's going to help them sort of maintain that revenue and volume strength in a given product or service.
Next, Shelby McFaddin on the specific stock she's following and her view of the tech marketplace.